Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Dan Deming, managing partner at KKM Financial. Good morning to you both. I know you'll be talking about Nvidia in a moment. Dan, just big picture. I mean, tech is under pressure. Financials, industrials, tech, energy are selling off today. What do you make of the market action we're seeing, and how do you feel overall?
Well, I mean, the volatility and the volatility that we're seeing within the various sectors is something that I think is a little bit disconcerting in the fact that we're seeing the VIX pushing back up now towards that 16, 17 level. And the dispersion within the market is such that it does appear that if we get a print that's even remotely negative tomorrow as far as inflation, with rates where they currently are, Nicole, that it could create some further selling pressure. And I think that that's what you're seeing unfold here in the markets as we're seeing some of the names that are considered more stable, some of the consumer staples, things of that nature, holding in there today, healthcare to some degree, where you're seeing the high flyers coming under some significant pressure, again, because I think of the dispersion that we're seeing in the market is something that is being called into question.
I see. All right. That being said, tell us a little bit about Nvidia today. I mean, I know that tech is under pressure. I know inflation is sort of the story and, higher for longer. There was also an unconfirmed report about Google having an ARM-based data center processor that could be weighing on it as well. Tell me a little bit about your thoughts.
Yeah, I mean, that seems to be the impetus today as far as some of the dynamics within Google being higher, NVIDIA under some significant selling pressure. I mean, it took a little while for it to impact the stock. We started out just down slightly. But as we've moved through the morning here, selling pressure has certainly picked up. And again, from a technical standpoint, and I imagine Ben will get into this as well, but when you look at NVIDIA, the fact that it was unable to take out the 975 level, and then we're experiencing 900 now being a ceiling. And the heavy selling pressure today, really, to me, it looks like it's going to have further downside before it finds some stability. And that's what the trade example was for today. Now, we've moved a lot since I initially looked at this, but nonetheless, I still think that there's an opportunity here to capture some downside in NVIDIA.
That's amazing. I know you have to send these trades in, and it moves as we're talking. How about this, Ben? When you look at the chart?
Yeah, coming under pressure today, that's for sure. Right back to a key area of support here, though. So Dan was just talking about how if we get a hotter than expected CPI data point tomorrow, we could see some continued selling, and this could be expectations thereof, the catalyst for some of the selling we're seeing today. But I'd argue the other side of the coin, if we get a softer than expected number tomorrow, again, this could just provide to be a longer-term buy opportunity for a market that's been very resilient into the end of last year and to begin this year. So let's just take a look at some of the recent selling, because it probably is a bit concerning to the bulls. Dan mentioned a key failed attempt up around the 975 level, and since then we've been coming off. You can look at some of the selling over the last couple of weeks from 967 down to 830. We're actually in a vertical phase out of balance here, so just kind of looking at price activity through the lens of the auction market theory concepts, ideas. You can see the transition from the 2 phases, horizontal into a vertical phase, and we're currently seeing that play out. We were horizontal into today around 870, and then you can see again a high conviction breakout to the downside. So this is just in line with the price decay we've been seeing, and this is, as Dan mentioned, off those recent highs up around 975. Now, I also mentioned that we've been in a pretty well-defined longer-term trend to the upside, but you can see that key area that failed. It was a bit of a double top that formed up there. You can also see how, as I mentioned, we're kind of just testing this key area, lower extreme range that we've been in. So pretty well-defined trend up off the lows from last summer around 392, testing a lower extreme of balance that we're forming around this 900 level. Let me show you what's going on here. I've got another chart. I want to show you this almost a parabolic move up, right? So in many ways, consolidation up here is going to be very healthy. This is what the bulls want to see. They don't want to see necessarily a V-top and this selling continue here much longer. But let me show you what's going on with Nvidia. As we take a look here, I've got it queued up for where we are relative to the 50 to 200-day moving average. You can see still holding above this blue line. That's the shorter dated. You can also see how RSI got a little bit overextended. You can see it's a reflection of some of the selling in terms of price activity. But yeah, as I mentioned here, Nicole, this could turn out to be just a longer-term buy opportunity. If the data comes in a little bit softer than expected, maybe things are getting a little bit overdone today.
All right, yeah, thank you for that. I see the double top and we see that big move up. And, you know, there are a lot of people who had FOMO and they were all getting really excited. You know, they were late to the game and they saw Nvidia and then they saw the price target for 1,200, another price target for 1,200, most of which are all above 1,000 right at this point. And you maybe have some retail traders chasing while smart money has been taking profits. I don't know. Dan, final thoughts here on Nvidia.
Yeah, I think Ben points out, certainly there's the possibility here of the consolidation. It was overdue for a pullback, and by basically many metrics, technical, fundamental, whatever you want to look at. But at the same time, they are the strong player in that realm, and if that continues to be a theme in the markets, that they're going to probably benefit. But looking at the trade example that I had set up, Nicole, really was to capture some pullback down towards that 800 level, and it was a condor to the downside. And buying the 850 put, selling the 800 put, selling the 750 put, and buying the 700 put, capturing that range to the downside, giving yourself the opportunity, though, to possibly get long the stock if we were to trade significantly lower as we move towards May expiration. So really, I was just playing with this trade example for a range to the downside, not for a total collapse. But and we'll see. We are breaking down, coming off that 830 level now, but nonetheless have now reached that 850 level. And if there's further selling, then I certainly could see us trending down to the 800 level or below.
All right, yeah, and look, George Ball, I just sort of threw it his way, and he said, look, this might have more downside, and he said, get out. You put the stop order at 800, and, if it does go way down below, look out below, right? How about Watsco? Let's talk about that one, which right now is trading at 436 today, down about 1.5–2%. Some of your thoughts there?
Yeah, it's coming off its peak, but and I think again, as George pointed out, I want to parlay what he had to say about the housing market and new home construction and such. Watsco certainly benefited from that, and they kind of fly under the radar. It's basically a heating and air conditioning operation out of Florida, but a company that has value metrics, now a little stretched in PE at these levels, but it certainly has benefited from the recent trends the last couple of months and really over the last couple of years in the housing market. And I do think that if we continue to see a strong housing market, that this stock is going to continue to realize further upside.
All right. Look, that's one area that people do like when they look at housing and they see that the newer homes doing better. Ben, your thoughts on the charts?
Yeah, Dan's right, Nicole. This is a stock that's kind of flown below the radar in many ways, and I think it's the first time, its debut here on Trading 360. So as we take a look at this, I just want to point to, he's also right about the trend up, right, across multiple time frames. Let's dive into, first and foremost, an hourly candle chart and just look at some of the price activity we've seen since February earnings. 373 the stock was trading, big run up recently up to the 447 level. I just want to check that. That's right, middle of February where those earnings were, bottom left to top right, pretty well defined. Again, a 60-minute candle chart, and we are currently forming a bit of a balance around this 440 level. So a little bit of a disappointment to see the stock break out to 447 and then kind of work its way back into this range. But I don't think you've necessarily negated this working assumption that we're trending higher as long as you hold above this 400 level. So let's just take a step back away from the hourly candles, add a little bit of time on, and I'm going to show you again a very well-defined longer-term trend that's been playing out here. I've got daily candles here. We're going all the way back to June of 2022, off that low we saw in the summer of a couple years ago. We're talking around $220, currently forming balance around this 440 level. Again, recently establishing a pretty well-defined upper extreme around 447. You got a lower extreme, we'll call it around this 425 level. So just kind of overlapping, rotational, kind of random here, but supportive of this longer-term trend to the upside. Let me show you, we were talking about Nvidia and that parabolic move to the upside. Another example here of one that's been rewarding the bulls here, the longer-term bulls. This chart goes all the way back to 2000, 2001. The stock was trading below $20. I mean, look at this, up to 447. I mean, again, flying below the radar to say the least here, Dan. I wanted to show you where we are relative to the 50, the 200-day moving average. Take a look. One more step back. We're holding above both of those. RSI is suggesting, again, we could see a little bit more sideways consolidation up here, but nothing to indicate that the trend's not to the upside here still. And, Nicole, that the bulls are not in control here. Looks to me like they are.
Well, and they recently increased the dividend, too. People
Yeah.
do like that. Final thoughts on Watsco, please.
Yeah, thanks, Nicole, for bringing that up. Because yes, I mean the company continues to kick out cash even at these higher PE levels. This company's still in a solid cash position. So I think when you look at this stock, it has been pointed out that 430 level to me is the level that I think there's an opportunity to get put into the stock at that level. So the trade example today was a risk reversal in May. Now we've backed off a couple percent from the 445 level, but nonetheless. It was a 430, selling the 430 put in May and buying the 460 call. It could do that for about $1. Now it's certainly it's going to be more so as a credit. But either way, the idea is you could possibly get long the stock on a pullback, but still have the upside call to participate to the upside should we see the stock continue on this trend higher.
Yeah. All right, next up, Devon Energy, $53. JP Morgan has an overweight and a $62 target. And I remember one of the analysts that came on, actually, as we were talking about consolidation in the industry, I think he said this one was one that he thought could be a takeover target. I could be mistaken, but I do feel like that was the one he mentioned. That being said, where do you think this is headed and why?
Well, I think that crude's going to still make its move towards 100, and I like Devon. It's U.S. based, so again, and it's oil and it's exploration based, and I think that that's going to be a continued theme here in the U.S. as we continue to see production going to all-time highs. So I think Devon's within the energy space well positioned relative to other exploration and integrated oil companies. So I do think that if oil continues to move higher here, if we continue to see this trend, and that Devon is going to benefit from the demand and the less restrictions because of the fact that they're U.S. based, they will not have to deal with some of the global issues that potentially could interfere with their exploration. And so therefore, that's why I like the stock continuing to maintain this upward trend.
All right, and look, there are plenty of people who are thinking oil's heading higher. Your thoughts, Ben, on the charts, please.
Yeah, upward trend indeed, as of recent, that's for sure, but coming into a key area of resistance right now. So one of those stocks where I think it's important to be time frame specific. Let's talk first and foremost about the rally we've seen with crude oil on the move higher. Shares of Devon have benefited, as Dan pointed out. We just recently traded from, take a look here, 51 all the way up to just shy of 54. I mean, pretty easily identifiable trend up here, bottom left to top right from last week Tuesday to, well, current levels that we're holding on to. So no real rejection of this upper level yet. And if anything, it does appear as we're just kind of sideways balancing here around this 53.40 area. So well-defined trend up here. Again, we're looking at a 5-minute candle chart. Let's broaden out this time frame a little bit. You're going to see a similar pattern playing out after a bit of a double bottom that formed here around this 40, 50 level, consolidation around 42. We're talking migration value to the upside, currently breaking out of a range that we had formed around this 48 level. So you can see the high conviction vertical aspect associated with this run up since the end of March, beginning of April. A lot of conviction associated with this move up here. Let me show you what's going on here. I wanted to point to you again, if you distance yourself one more time, another step back, daily candles going all the way back to, we're talking November of 2022. You can see that the stock had been coming under pressure and how we're now just taking out this key area 50. So off the recent lows here, but coming into a couple of areas of resistance right around this 55, 56 area. So the bulls have some heavy lifting to do, that's for sure. But what I do like is the momentum into this area of resistance right now. And we could be seeing a bit of a shift here in terms of crude oil, especially if we were to continue to see prices higher. One last look at Devon. Daily candle chart here. You can see taking out the 50, the 200-day moving average, which really speaks to the momentum off those lows that we mentioned, that double bottom you can see around that $40, $41 level. But also look at RSI here, Nicole. I mean, this really just speaks to the strength here. And this is not a sell indicator because it's overdone to the upside, right? Overbought. RSI, relative strength index, overdone to the upside, does not a sell signal make. It can stay there for a long time, especially in a well-defined trend like we're seeing here with high conviction, high energy, and high participation off those lows.
All right, thank you for all of that. And we'll give you the final word here, Dan.
Yeah, I like what Ben identified, that top at 55 level previous, Nicole, because I think that if we this momentum in the stock, if we break through there, then I think that we could see it go to 60 very quickly, and that's why the trade example today is to try to take advantage of that. That pushed out to June in this case, but really buying the 55-60 call spread, I think you can do that for about $1.50 here. So again, you can capture $3.50 if we were to cap above 60 in June expiration. But as Ben pointed out, define the risk to the downside because it's had such a significant run. But also, if we do break that 55 level, I do see it potentially going to 60 in the next month or so, based on momentum and also just the fact that you could see a shift in dynamics as far as from a technical standpoint, that would really put further momentum to the upside, I believe, if we take out that 55 level.
Thank you both so much for the big three today. Good luck there. We had Nvidia and Watsco and also Devon today. Dan Deming at KKM Financial and our own Ben Lichtenstein there. The technical charts. We appreciate you both. Thank you.